Guys, Brad Danger here, and this is it. Your last shot to win my 700 horsepower flame-spitting Bayside Blue GTR plus $10,000 cash. Right now, we have a mega multiplier and it's live, but once this ends, it's gone forever. Grab a shirt, grab an It's Lit sticker, or if you don't have time to shop, just grab a quick entry pack and bam, just like that, you are entered. Guys, it's the final days. This 700 horsepower GTR and $10,000 cash could be yours, but only if you get entered. So click the link down in the pinned first comment and get entered before time runs out. Hey guys, Brad Danger here, and today we're talking about something that could literally get your wheels yanked out from under you. And no, I'm not talking about potholes, I'm talking about banks. Yeah, those fun suckers in suits that smile while they drain your bank account. Now listen, if you drive Uber or Lyft or DoorDash or Postmates or Amazon Flex, heck, even Turo, this video might be the most important thing that you need to watch this year. And if you don't drive for any of those companies, well, you still gotta watch because this is insane. What I'm about to tell you will save your ride, your wallet, and maybe even your sanity. See, I've been seeing something absolutely insane at auto auctions recently, and this has stopped me in my tracks. Whoa. There were entire rows of repossessed cars still rocking Uber and Lyft stickers in the windows. Not one, not two, dozens of them. And these weren't clapped out beaters either. We're talking late model Civics, Camrys, Accords, even a few higher end rides like Uber Black. Why? Well, because their owners were using them for rideshare and deliveries, and buried in the fine print of their loans, that's a big fat no-no. Sound insane? Am I right? You make every payment on time, you treat your car like a moneymaker, and then boom, the repo man shows up while you're dropping off someone's Postmates burrito. Welcome to the new reality. So here's the plan. We're gonna dive headfirst into this mess. I'll tell you what I see at the auctions, why banks are cracking down, how repos happen even when you're current, and most importantly, what you can do to protect yourself. Because, well, even if you don't deliver or pick people up with the rideshare companies, you need them to get from point A to point B when you need a ride. And what's insane is that you can still have your car repoed even if you're current on payments. And I mean, you could have your car snatched away because you drove some drunk guy home from downtown on a Friday night. Yeah, crazy, right? So why now? Why are banks suddenly cracking down like high school hall monitors just discovering vaping? Two words, risk and money. Except that's not how it played out. And guess what happens when you pile 150,000 miles on a car in just 3 years? It's worth peanuts. Depreciation goes from a steady slope to an absolute nosedive. One stat, a new car loses about 30% of its value in the first 2 years, but an Uber car, try 50, 60, even 70%. You couldn't give some of these cars away at retail. Fast forward to today, and banks have had enough. They've written contracts adding stricter clauses, no ride shares, no delivery, no rental, personal use only. They've even built teams to sniff out violators. Yeah, banks are literally playing detective now. Guys, you're probably thinking, okay, Brad, but how would they even know? I'm just one dude driving a Corolla at night. Oh, they know. They have secret shoppers, just like all the big retail stores. So, bottom line, if you're thinking about flying under the radar, well, guess what? You're not. And here's where it gets dirty. The fine print. That single sentence has repoed thousands of cars. Even big players like BMW Financial Services are known to swoop in if they find out that you're Ubering one of their cars. They don't care if you're paid up, they care that you violated the deal. All right, so what actually happens if your bank lowers the boom? So now you're carless, potentially in debt for a car that you don't have, and your credit looks like a train wreck. One DoorDash driver literally had his car hooked up mid-delivery, sprinted back and drove off just as the repo man was tightening the chains. It went absolutely viral online. Funny to watch, but terrifying to live. And it's not just gig drivers. Repos in general are way up. According to Cox Automotive, repos rose 23% in the last year, even higher than pre-pandemic levels. Inflation, higher car prices, ridiculous insurance hikes, it's all squeezing people. Subprime delinquencies, highest in decades. All right, enough doom and gloom. Let's talk solutions. Because if you're out here hustling, well, just like I am, because guess what? You can win this GTR if you want to. Just click the pinned first comment down below and you can get entered to win the 700 horsepower GTR. Get rid of all your car payments and you can Uber or Postmates with it to your heart's delight. So what do you guys think, Ideal Fam? Are banks justified or are they just kind of being greedy villains twirling their mustaches? On one hand, it feels unfair. People are grinding, trying to make a living, and they're getting punished for the hustle. On the other hand, though, banks say they didn't agree to finance a taxi cab. They signed up for personal use only. Either way, the reality is clear. If you're driving for Uber, Lyft, DoorDash, or Turo with a personal auto loan, you are rolling the dice. The repo man could be around the corner. So, my personal advice, be transparent, protect yourself, and don't ignore the fine print, because the worst words you'll ever hear aren't from a bad Uber rating, it's the sound of a tow truck hooking up your car. Stay safe, stay smart, and as always, stay ideal. And if you enjoyed this vid, like, subscribe, turn on that notification bell, and send it to one of your friends that may find it helpful. Also, check out these ideal vids over here and go to winthisIdealCar.com to get entered to win my 700 horsepower GTR. I'm Brad Danger, this is Ideal. We'll catch you next week, and promise me one thing, keep living the ideal lifestyle. All right, picture this. I roll up to a local dealer auction last week, just scouting the lot, right? I'm expecting the usual suspects, some fleet cars, maybe a few off-lease crossovers, the occasional retired rental Corolla that smells like a Vegas nightclub. But then I see it. A long row of sedans and crossovers with Uber and Lyft stickers still proudly plastered in the windshields. It looked like the after-party parking lot for an Uber convention, except everyone forgot to show up. So I start walking the line. First up, a Honda Civic, barely 4 years old, 120,000 miles. Yikes. Next, a Toyota Camry SE, decent condition, but interior worn down like it carried half the city to the airport. Then a Nissan Altima, then a Hyundai Sonata, then a Prius, because of course there's a Prius. Every one of them still had that little glue outline of the Rideshare decals like a badge of shame. I bump into a bank rep overseeing the sale and ask, "Hey, what's the deal with these? Why so many?" He just sighs and says, "Yep, a bunch defaulted. But honestly, more than half weren't even behind on payments. They got repoed because the owners were using them for Uber, Lyft, or deliveries without telling us. Contract violation." The rep goes on to explain, finance contracts now often forbid commercial use. That includes ride-hailing, deliveries, or renting your car out on platforms like Turo. Break that rule and they can yank the car back, no matter how spotless your payment record is. And he had stories. Oh boy, did he have stories. This Civic, Uber driver, 100K miles in 24 months. Upside down on the loan. That Altima, Amazon delivery guy, interior looks like a storage warehouse. That Camry, Lyft driver, lied about it. We caught him through insurance. One after another, cars that had been worked to death by gig driving, all now headed for the auction block. It honestly felt like walking through a graveyard of financial mistakes. A few years back, banks were thrilled to finance cars for Uber and Lyft drivers. Easy loans, low down payments, decent interest rates. They figured, hey, if someone's using the car to earn, that means more income, right? More income equals more reliable payments. Everybody wins. Here's what actually happened. People financed cars, sometimes way overpriced, sometimes with no money down, and immediately started grinding them 24/7. We're talking 50,000 miles a year, every year. Cars that were supposed to last 7 or 8 years got used up in 3 at auction. And let's not forget maintenance. A lot of gig drivers don't budget for upkeep. Oil changes get skipped, brakes wear down, interiors get trashed. Banks found themselves holding assets that looked fine on paper, but were garbage in reality. Insurance snitches, rideshare insurance endorsements are different from personal policies. If you file a claim with a passenger in the back, your insurer can drop you and notify your lender. Data scraping. Ever notice how Uber, Lyft, and Turo require your VIN? Banks can cross-reference those databases. If your VIN pops up on Turo, congrats, you've just snitched on yourself. Mileage spikes. Take your car in for emissions and suddenly you've added 35,000 miles in 1 year. That's a red flag. Some lenders even get telematics data directly from connected cars. Good old-fashioned eyes. Repo agents and auditors see those decals. Some lenders even send spotters to high-traffic areas like airports. Nobody reads contracts at the dealership. You're too busy imagining yourself cruising home in your new ride, but buried in there is a line that says something like, "Vehicles shall not be used to carry passengers or goods for hire." Case in point, a woman listed her car on Turo, never missed a payment, and still had it repoed. Her lender caught wind and said, "Nope, broke the contract." It went on her credit as a repossession. Try explaining that to your next lender. Car gone, tow truck shows up. Doesn't matter if you're parked at home, at work, or mid DoorDash. Repo agents don't play. Auction time, your car goes to wholesale auction. And trust me, they'll get way less than you think. Deficiency balance. Say you owe 30K, they sell it for 15K. You still owe the remaining 15K. Credit nuked. Repos show up on your report for 7 years. Future lenders see that and either laugh you out the door or slap you with sky-high interest. Debt collectors miss paying the deficiency, expect calls, lawsuits, garnishments, and it's not just gig drivers. Repos in general are way up. According to Cox Automotive, repos rose 23% last year, even higher than pre-pandemic levels. Inflation, higher car prices, ridiculous insurance hikes, it's all squeezing people. Subprime delinquencies, highest in decades. But gig drivers are extra exposed. Banks see them as high risk, high miles, high wear, high chance of default. So they're putting extra focus on cracking down. Read your contract. I know, boring, but seriously, dig it up. Look for words like commercial use, rideshare, or for hire. If it's there, you've been warned. Get the right insurance. Tell your insurer you're driving for Uber or Lyft. Pay for the rideshare endorsement. If you crash without it, you're screwed 6 ways to Sunday. Consider refinancing. Some lenders, especially credit unions, offer commercial auto loans. Yeah, the rate's higher, but at least it's legit. You can even set up an LLC and finance under that. Drive what you own. The safest play, buy a cheap, reliable car in cash and use that. Old Corolla, Camry, Accord. Let your riders complain about no CarPlay. At least you won't get repoed. Watch your miles. Spread out the wear. Maybe rotate cars if you can. Keep maintenance up. A well-kept, high-mileage car is less scary to a bank than a neglected one. Communicate. Already driving gigs in a financed car? Call your lender. Seriously. Say, hey, I'm using this commercially. What are my options? Scary conversation, but better than a surprise repo.